Hello and welcome to Doch Na Chien Investment. This analysis is for Chubb on the New York Stock Exchange as of 7th of August 2026 with a share price of $354. The full report is on dochnachien.ca. The best-in-class property and casualty underwriter, cheap on book value with an 83.8% combined ratio and book compounding double digits. The medium and long call is buy. Short term, it is a hold. The stock sits essentially at consensus with momentum cooling and no fresh entry edge, so there is no confirmed technical trigger yet. Buy on confirmation, accumulate on weakness. The quality here is genuinely elite. Chubb ran a combined ratio of 83.8% last quarter, meaning it kept roughly 16 cents of underwriting profit on every premium dollar, where the median rival only breaks even. Underwriting income rose almost 19% to $1.94 billion, core operating earnings per share grew over 18%, and book value is compounding at about 12% a year. Core operating return on equity is 13.7%, and return on tangible equity is 20.5%. We deliberately score it on insurance economics, not a headline price-to-earnings ratio. Reported net income swings with mark-to-market bond moves that say nothing about the underwriting. On value, Chubb is cheap on the lens that actually matters for a balance sheet insurer, price to book, not price to earnings. The shares trade at 1.81 times book against a warranted 2.57 times built from Chubb's own return on equity and the live discount rate, a ratio of 0.70, squarely in the attractive band. On tangible book, it trades at 2.68 times, below the 3 times rich line and well under a justified 4.8 times on that 20% return on tangible equity, attractive on both lenses. What the low multiple ignores is the higher for longer tailwind. The roughly $150 billion bond book keeps rolling into higher yields, compounding investment income for years. So why not buy today? The reason is timing, not the business. The trend is constructive, but the stock sits essentially at the consensus target with momentum cooling, so there is no fresh entry edge here. Our timing score is 63. The fundamental entry path is met, it is cheap on book, but neither the technical nor the catalyst path is open, so the entry ladder reads half size on the fundamental path alone, and the short signal is capped at hold. The plan is to buy on confirmation, a reclaim of $356 on heavier volume as momentum reignites, or on a pullback into 348, then 334 support, which would be a better entry than chasing. The risks are real, and they are why the bear case exists. That bear sees the shares fall to about $300, some 15% below today, and, importantly, this is an insurer-specific downside, not an AI or index derating, because Chubb is not AI levered, its beta is only 0.41, and its earnings are understated by non-operating items, not inflated. The first risk is the catastrophe cycle. A bad hurricane or wildfire year could push the combined ratio well up from the low 80s and take a real bite out of a single year's earnings. The second is reserve adequacy. If prior year claims develop worse than booked, that flatters then hurts the numbers. The third is the commercial rate cycle. The hard market is softening, with property rates coming down as record reinsurance capital chases share, which slows premium growth. None of these break the franchise, but anyone can cap the stock for a while. Now weigh the risk against the reward. The bull case is roughly 16% above today, the base case the most likely, about 6%, and the bear case a fall of about 15%, so you are risking about 15 to make 16. So, our call on Chubb, on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Doch Na Chien Investment at dochnachien.ca. The link to the full report is in the notes below. Have a great day.